The Peter Schiff Show.
Today's podcast is sponsored by Shopify. Shopify is a platform designed for anyone to sell anywhere, giving entrepreneurs like myself the resources once reserved for just big business. Sign up for a $1 per month trial at shopify.com/gold, all lowercase. Well, Friday the 13th was not an unlucky day for the stock markets because all of the major indexes finished out a positive week on a positive note, although the only asset that actually made a new all-time high this week was gold. And before I continue with the normal podcast, I want to just interrupt it to make a little announcement regarding my wife, Lauren, who has been working very hard over the past year or so with her partner, Tony Fredinelli. Some of you may have heard of Tony. He used to be the guitar player for Third Eye Blind. And he was a fan of the podcast. So a couple years ago, 2-3 years ago, he did reach out, introduced himself, said he was a fan of the podcast. And at some point, he got introduced to my wife. And, he was a musician. My wife was a stage actress when we got married, and she kind of, gave up that career to be a wife and mother. But she's also a very good singer and good dancer. And apart from just doing a lot of karaoke parties at our house, although she did sing in a local band here, she also had a knack for songwriting. And so the two got together and they formed a duo, and they call themselves the Laughing Cats. And their first album that they created from scratch. So my wife wrote all of the lyrics to the songs herself, and Tony wrote the music, and then he plays guitar. They had some other instruments there. My wife sings. And so the first album is Funny Money, and the first single off that album was released today called G.Y.B. And you can listen to that song. That's the only one that's been released so far. You can listen to it on Spotify. We have the link on the description to this website. I've been posting it on X, so little clips. People have commented about the video. My wife just did that with her iPhone, right? And she put them all together herself. This is she's not a professional singer. She was a professional actress, but she's kind of doing this on her own. But I think she did a really good job, both her and Tony. I think the songs are very catchy. The first song that is released today is more of an 80s pop type song. The entire album isn't of that genre. There's a lot of variety in the 11 songs. And in fact, she's already working on some new songs. She was able to write these songs very quickly. I'm not really sure how she's able to do that. But I would encourage everybody to listen to the song. I think you'll like it. It's quite catchy. I've been singing it myself. I've been hearing it a lot as Lauren has been fine-tuning it over the past several months to get it ready for this release. But listen to it, and if you like it, or even if you don't, although I'm sure that you will, share it with people, because I'd like to see, how popular we can make this first song. If people start to listen to it. I mean, it's not like the olden days. The music industry, I guess, is very different than it used to be with the internet world and the way people now stream music instead of, buying albums. Or even CDs or whatever was more recent. But I think it's a good song. Maybe it'll catch on. I mean, if we could get it beyond the Peter Schiff show fan base. So I think if it's just my listeners who enjoy it, that's fine. But obviously it'll get a lot more traction if you guys share it with your contacts, and maybe they'll share it with people, and we'll see what happens. But, I'm very proud of the work that she did. This is not, again, her business. I mean, she's a mother, but she really enjoys this. This has been a good creative outlet for her to try to, do something that satisfies that urge. She's a very talented person, and so she enjoys this kind of stuff. So hopefully everybody else will enjoy listening to it as much as she enjoyed recording it. But anyway, again, so go to Spotify, listen to the song, and then share it with your friends. Anyway, so let me get back to today's podcast. I started talking about gold and the fact that gold hit a new record high pretty much every day this week. and it closed at a new closing high for a day, for a week. Gold closed, I believe the settlement price was 2,578, although that could change. I'm recording this about 5 o'clock East Coast time, so sometimes they end up changing the price a bit, but that was where it was the last that I looked. The high of the day, intraday, that I saw was 2,583, maybe a little bit above that. So that is the new all-time record high for the price of gold. Gold is now up 25% on the year. That's a big year, and the year's not even over yet. Now, let's contrast that to what's going on in the stock market, because a lot of people are talking about, stock market's really strong, and it has been strong if you measure it in dollars, U.S. paper currency. So the Dow was up 2.1% on the week. Now, if you just heard that, oh, that's a good week. Dow was up 2.1%. Gold was up 3.2%. So that means in terms of gold, priced in gold, the Dow was down. Even the S&P, which rose 3.1% on the week. In gold terms, it was actually lower. Now, year to date, the Dow is up 9.75%. That pales in comparison to 25%. The Dow is getting crushed this year, priced in gold. Now, the S&P is holding up a little bit better. It's up 18.6% on the year, but it's still down in terms of gold. NASDAQ was up 4.75% on the week. So the NASDAQ beat gold on the week, but it's not beating it on the year. Even with all the Mag 7 stocks and NVIDIA, the NASDAQ is up about 19.8% on the year. Still down in terms of gold. And the Russell 2000 also had a good week, up 3.9%. So it edged out gold's 3.2%. But year to date, the Russell 2000 is only up 8.4%. It's getting demolished in terms of gold. The only thing that's beating gold, really, as a group, are the gold mining stocks. But they're not beating it by much. Now, finally, today, GDX and GDXJ finally made new 52-week highs. Even though gold was hitting record highs earlier in the week, these indexes still hadn't caught up. So it took today, right? We had to take out the old high for gold by more than $50 before gold got back to where it was 3 weeks ago, when gold was $50 lower. But the GDX was up 9.3% on the week. And the GDXJ, the juniors, that was up 13.6%. 13.6% on the week and 31.6% on the year. Now, you might think, well, that's a good return. These stocks are up 31% on the year. Not with gold up 25%. With gold up 25%, these stocks should be up at least 50, if not 75%. The reason they're not up more is because investors have been nervous the whole way up. Everybody keeps expecting the price of gold to collapse. On my last podcast, I talked about the fact that 2,500 was probably the new floor, that we could go slightly below it. And I think the lowest we got, ever since we got above 2,500, the lowest we got was about 2,480. And here we are now $100 higher at 2,580. But when gold had a 1% decline from its highs, it went from 2,530 to like 2,480. Gold stocks got clobbered. The GDXJ was down 15%. And so this week, it recouped all of those losses. But the indexes are still extremely cheap. And I still think that people should be buying these stocks as fast as they can come Monday morning, regardless of where they are. Obviously, you need to be a speculator. There's risk in these stocks. But as far as I'm concerned, they may as well be giving them away in Cracker Jack boxes. That's how cheap they are. And gold still going up. Silver almost back to $31, above $30 today, up, percentage-wise. It was a bigger move than gold. Silver stocks, of course, are still well below their 52-week highs, because even though gold made a new all-time high, Silver didn't even make a new high from a few weeks ago or a month ago, wherever it hit that level. So silver is still the sleeper, and the silver stocks are very cheap. So over the weekend, you can go to Schiff Gold, as I've been saying. There's no reason to wait for a pullback because you're not going to get any significant pullbacks. I think the risk is that you're waiting for gold and silver to come down, and instead they go way up. And the reason they may go way up next week is the Fed's rate cut. And I've been saying for months now that I thought that they were going to cut 50 basis points. In fact, I thought they might have even done an emergency 50 basis point rate cut, but they didn't have to. The Bank of Japan helped out, plus the market started to discount a 50 basis point cut. In fact, the reason the markets were so weak last week, and the reason I titled that podcast that markets were on the brink of a collapse, was because the data that came out last week caused a lot of investors to think that we wouldn't get 50 basis points, that we're only going to get 25. And I think the market needs 50. In fact, they need more than 50. But the Fed needs to show the market that they're serious about cutting rates. And the markets don't want a mamby-pamby 25 basis point cut. They want 50, and they want to know that the Fed has got their back and that it's going to be doing more cuts. Now, this week, what happened is you had a lot of people coming out, even at the Fed, kind of indicating that 50 is still on the table and 50 wouldn't be unrealistic. In fact, a lot of people have come out, big people on Wall Street are now supporting, and they're behind this 50 basis point rate cut. And so I think that the Fed is going to deliver exactly what the market expects. In fact, if they don't get 50 now, if they end up with 25, we could get a big drop. In fact, one of the things that I was concerned about last Friday was the dollar breaking down against the yen. I thought it might break down below 142. And it did. Not only did it break below 142, it closed the week below 141. The dollar yen closed at 140.9. This is the lowest the dollar has been against the yen all year. And the dollar index also was down about 1% on the week. It still hasn't collapsed. It's still above 101. And the dollar is still weak, especially against the Swiss franc. It didn't crack 84 cents yet. I mean, that's going to be, I think, a key level. I think it closed around 84.9. We were lower, but dollar recovered a bit. But the dollar has been particularly weak against the Swiss franc. Remember, it's only about 7% above an all-time record low. But we got the weakness in the yen, but it didn't really cause any kind of significant selling in Japanese stocks. I mean, there was an initial maybe 2% drop on Sunday night, but the market kind of recovered. And so by the time we rolled around to our time zone, we were already on the recovery. And then we got all of this 50 basis point stuff that started to, rekindle the hopes that the Fed was going to do 50. And I think that is what caused the rally in the stock market, but it also caused the rally in gold. And this is something that's very significant too. We'll see where gold is, but gold's making record highs, and the Fed is about to start cutting interest rates. That's never happened. I mean, if you look at the last couple of rate cutting cycles, the most recent one started in 2019, July 31st, 2019. When the Fed cut rates, and then, of course, they eventually went to zero with COVID. But that first rate cut, gold was at $1,412. That was the price of gold, right? Over $1,000 an ounce lower than it is now. But that was still 26% below the record high. The record high was 1920. So gold was way off its highs before the Fed started cutting. If you go back to the cycle before that, which was the September 18th, 2007 cut that preceded the 08 financial crisis, but that was the first cut. At that time, gold was at $726 an ounce. It was 15% below its record high from 1980. So the Fed has never started a cutting cycle, at least in modern memory of these cuts, with gold at an all-time record high. And, it's not a coincidence. The first time the Fed started cutting in 2007, gold was 726. So I didn't look back when they started cutting in 2000, but then when the Fed started cutting in 2001 or after the dot-com bubble popped, gold was under 300, right? So when Greenspan first started cutting, right, you had gold under 300. And then when they had to cut rates again, leading up to the financial crisis, gold was 726. When they started the next easing cycle, it was 1412. And now they're starting another easing cycle with gold at 2600. Right? This is not a coincidence that the Fed keeps easing, causing inflation, printing money, and the price of gold goes up. Now, the question is, how much higher is this easing cycle going to send the price of gold? Because I think this one is going to be the big one. I think we've been building up, right, like a crescendo, and now we're going to have this huge rally because this is going to be the most inflationary bout of monetary policy that we've seen. It may even be bigger than COVID, but it's certainly going to go on for longer than COVID. COVID was like, a shot in the arm, quick, right? A quick burst of money printing and spending. But this could go on for a much longer period of time. And so I don't think we're just going to see gold going to 5,000 as a result of this easing cycle. I think it's going to go much higher than that. I'm going to continue with this topic. We can take a quick commercial break and we'll be right back.
When you think about businesses growing their sales beyond forecasts like Gymshark or a legacy business like Mattel, sure, you think about a product with demand, a focused brand, and influence-driven marketing. But an often overlooked secret is actually the businesses behind the business that make selling and buying simple. For millions of businesses, that business is Shopify. Nobody does selling better than Shopify, home of the #1 checkout on the planet. And with Shop Pay, you can boost conversions up to 50%, meaning way less abandoned carts and way more sales. So if you're into growing your business, your commerce platform better be ready to sell wherever your customers are scrolling or strolling on the web, in your store, in their feed, and everywhere in between. Businesses that sell more, sell on Shopify. What I love about Shopify is no matter how big you want to grow, Shopify gives you everything you need to take control and take your business to the next level. Upgrade your business and get the same checkout that Mattel uses. Sign up for your $1 per month trial period at shopify.com/gold, all lowercase. Go to shopify.com/gold to upgrade your selling today. Shopify.com/gold.
So before the break, I was going over the returns on the week. Also year to date on the stock markets, on gold. I don't want to leave out Bitcoin because Bitcoin did have a big up week, and I don't want people to accuse me of ignoring Bitcoin when it goes up. But I think Bitcoin's rally was irrelevant, but I'm going to point it out anyway. Bitcoin was up about 12% on the week from Friday to Friday in the, I think in the spot market. Although I looked at the ETFs, and the Bitcoin ETFs were up 7.7%. On the week. So they didn't do as well as the gold stocks did, but they still had a pretty big bounce. But that's because, they got beat up the week before. Bitcoin is still below 60,000 as I'm recording this, although it's pretty close. I'll take another quick look at it just in case it popped above it. In fact, it actually did. It's 60,250 right now. So we are finally above 60,000, but we were never above 60,000 when the U.S. stock market was open today. It just now after the close that we finally got above 60,000. But remember, the high was about 74,000, and that was set in February of this year. So it's been 7 months since Bitcoin has made a new high, and during that time, gold has set multiple new highs, including the new high that it set today. In fact, priced in gold, Bitcoin is still down about 37% from where it was almost 3 years ago. So again, this is a stealth bear market that all the Bitcoin pumpers want to ignore. And they keep talking about how Bitcoin is going to take over gold's market cap. Well, this year alone, gold's market cap has increased by more than 5 times the entire market cap that Bitcoin is right now. Just the gain this year is more than 5 times Bitcoin's entire market cap. There's more than $17 trillion worth of gold, and there's maybe 1 trillion Bitcoin, right? Although that 1 trillion can evaporate almost in an instant because it's just nothing but air. But the key is that it's gold that's making the new high, not Bitcoin. Now, another market, though, that I think is important is oil, because oil, though it was up 1% this week, got clobbered last week. Oil closed the week at $68.30 a barrel. And this is the interesting point about oil. A lot of people are trying to blame inflation on oil, right? That high oil prices are why we've had inflation because oil prices have gone up. We're only comparing oil prices to where they were like coming out of COVID, right? When oil prices collapsed. In fact, they even went negative for a while during COVID. So oil was super cheap, but $68 a barrel is not expensive. In fact, historically, it's cheap. In fact, in terms of gold, you could buy 38 barrels of oil with 1 ounce of gold. The only time oil was this cheap in the history of oil, which goes back a long time, the only time oil was this cheap was during the COVID months, right? When it went negative, which is a complete aberration. But outside of those few months in early 2020, oil has never been cheaper than it is right now in terms of gold. But even in terms of dollars, at $68 a barrel, oil is cheaper today than it was 20 years ago. It's more than 50% below the high price from 2008. How many things can you buy today as a consumer that are cheaper than they were 20 years ago? Other than like a plasma TV or something like that, right? Something that's consumer electronics, go to the supermarket, try to find something that's cheaper than it was 20 years ago. Oil is a bargain. It's cheap. That's why, when Donald Trump says his solution to inflation is drill, baby, drill, that's not going to do anything. Oil is not the problem. We're getting a bargain on oil. One of the reasons that the CPI is not up a lot more is because oil came down, right? Oil is masking what's going on. And in fact, if the Fed didn't create all this inflation, imagine how much cheaper a barrel of oil would be. But the other significant point that I'm trying to make is oil's not going to stay this cheap. Oil is going to have a huge rally, probably in 2025. And one of the reasons too that oil may be this cheap is because we dumped so much of our strategic petroleum reserve on the market. That's one of the reasons that oil got as cheap as it was. But that reserve is pretty much depleted, right? We're not going to be able to do that as an encore. And so imagine what's going to happen to the inflation numbers when oil really starts to rise, because that is going to happen. And what the catalyst is going to be for the next explosion in commodity prices, led by oil, I think, is going to be next week's rate cut. And the irony there is that the Fed is cutting rates supposedly because it's vanquished inflation, right? It's beaten inflation. It's coming down. It's on a glide path to 2%. And because they won the war against inflation, we can cut rates. Cutting the rates actually is the catalyst for a surge in inflation. So the very victory celebration is what causes defeat, although they lost anyway. But there's the irony of the whole thing. And that is what the markets don't understand, is that we're going to get this huge pop in inflation and we're going to get a recession, right? Right now, the markets are thinking we're not even going to have a recession, right? We're going to have a soft landing and inflation is coming back down to 2%. They're wrong on both. We're going to have a hard landing and inflation is going up. And so nobody is modeling that. Nobody is expecting that. Maybe gold is. I mean, gold is going up. Again, the rise in the price of gold is what shows you that the Fed is making a mistake, that any cut is a mistake, especially a 50 basis point cut, but they should be hiking interest rates. But no one is covering it. On yesterday, gold made a new high on Thursday. I was watching CNBC. They didn't even talk about it. Then I watched this show, Fast Money, for an entire hour. And, they didn't mention it once. The best performing sector, the GDXJ yesterday was up like 6%, over 6%. I mean, isn't that fast enough money for these guys? They didn't even mention it once. Not one guy mentioned gold or a gold stock. They went over sectors. In fact, early in the day, I was watching on CNBC, and the lady, whoever was, talking, said, let's go over the markets. Let's examine what's happening. Let's look at the movers of the day, the sectors that are going, the stocks that are going. And I know the biggest movers are the gold stocks. Didn't mention a single one of them. like as if they're not even stocks. And of course, didn't even mention the price of gold. This should be the biggest topic of conversation. Again, gold up 25% this year. It's beating all the stock market. So why not cover it? But more important than gold going up is why it's going up, what it portends, right? That the Fed is making a mistake. This is a harbinger of much higher inflation. And again, what is going to really complicate and compound the severity of this recession is that rates are going up. Because when inflation rears its head in a bigger way, it's going to not only make consumer prices go up, it's going to make long-term interest rates go up. And the Fed has not had to deal with this, right? They've had the luxury of having this sub 2% official inflation, and they've been able to stimulate the recessions with creating more inflation. And the bond market's cooperated. It's not going to happen this time. The vigilantes are coming back. Long-term rates are going to go up along with consumer prices. So it is going to be a brutal recession with no relief. And to the extent that the Fed tries to stimulate, which they will, the only thing that's going to be stimulated is inflation, while the underlying economy is going to be sedated. Now, I want to look at some of the numbers that came out this week that, excited, I guess, the markets, got them to think that, okay, yeah, maybe we can get the 50 basis point rate cut. The first one was the CPI for August. That came out earlier in the week. And on 9/11, which, oh, by the way, yes, we did have the, again, I don't like to use the word anniversary when you're talking about a horrific incident like the terrorist attack on 9/11. But that obviously happened a week ago. And, again, and I don't want to get into it on this podcast, but apart from the loss of life, the tragic loss of thousands of people who died on that day, and I don't want to minimize that loss and the losses that the family members have dealt with. But on a bigger picture, hundreds of millions of Americans, as a result of this, lost their freedoms, their liberties, not as the result of the terrorist attack, but as a result of our response, which unfortunately was led by George W. Bush, a Republican, right? He came up with the Patriot Act and a lot of these other things that substantially diminished individual liberty. So the terrorists actually won. If their goal was to minimize our freedoms, they succeeded. But they didn't succeed by killing 3,000 or 4,000 Americans, right? They succeeded because a few hundred congressmen and president signed on to all this legislation. They used that tragedy in order to remove our individual liberties. So the real threat wasn't coming from foreign terrorists, but our own legislature, our own Congress, our senators, our representatives, and the president, right? They took advantage of what happened. And that's, the reason, and I'll get into a little politics later, but that's why I'm so fearful, certainly of a Harris administration when this economic collapse happens, because they will take advantage of that to try to bury what's left of capitalism, blame the collapse on capitalism, and use it as an excuse for all sorts of socialist legislation, because we know that Kamala Harris, in her heart, is Marxist. And Trump even pointed that out at the debate. Now, I'll get into that later. But so that is the risk. And that's the main reason, among others, that I don't want her in the White House. I think that her being in the White House is better for, gold. It's worse for the dollar. So I may make some more money under Harris, but I don't want that outcome. I mean, gold's going to go up regardless. I'll do well regardless, but I'd rather, for the sake of my country and my kids and everybody's kids, that Trump win this election. Not that he's a panacea. He's not. Things are going to get a lot worse even if we elect Trump. It's just that they could get even worse than that if we elect Harris. But anyway, let me get back to the data that I wanted to talk about. So the CPI, the consensus was for a 0.2% rise, and we got 0.2% for the month. Year over year, we were supposed to go up by 2.6, and we went up by 2.5. Right? So the market liked that. This is great. We're 2.5%. We're almost at 2. No, we're not. what's driving it down? It's oil. It's this cheap oil that's not going to stay cheap. If you look at the core, we're not even close to 2%. The core actually rose more than expected. Instead of being up 2, it was up 0.2, it was up 0.3. And so the year-over-year core is up 3.2. Now, that's exactly what the markets expected, so they weren't upset. But 3.2% core is not 2, and it's not going to get anywhere near 2. It's actually going to be heading back up. But because this number wasn't worse than expected, the markets breathed a sigh of relief because this doesn't derail 50 basis points. Because if they wanted to do 50 basis points before they got this data, why would they change their mind? Because the data is pretty much in line with expectations. So the markets liked this CPI data for that reason. Now, initially, gold sold off slightly, but immediately rallied. And all the inflation data that we got this week, gold ended up rallying. We got the PPI, the producer prices, the next day, and pretty much the same story. They were looking for up 0.2, and we got up 0.2. Year over year, we were up just 1.7, which was slightly better than the up 1.8 that they had forecast, and it's better than the 2.2 from the prior month. But again, this is mainly energy that is doing it. If you take out food and energy, we're up 2.4% year over year. And if you take out food, energy, and trade services, we're up 3.3% year over year. And this is accelerating from where we were a year ago. So we've already turned the corner and we're heading up, but no one cares. All the markets care about is the number worse than what the Fed was expecting? Because as long as it's within expectations, the 50 basis point rate cut can happen. And so again, we didn't get worse than expected news on the PPI. And so that was good news for people expecting a 50 basis point rate cut. And in fact, the import-export prices that came out today, right, was more good news in that the numbers were better than expected. Import prices dropped 0.3 instead of 0.2 on the month. And year over year, we only had a 0.8% increase in import prices as opposed to the 0.9 that they were expecting and less than the 1.6 from the prior month. So if you just take this at face value, you know, prices are coming down. And export prices, even better, they were down 0.7% versus expectations of up 0.1. And last month's gain of 0.7 was revised down to a gain of 0.5. So that was good news. And the year over year, export prices were down, not up, down 0.7%. So again, this is like giving the Fed the green light. You've got cover now. You can use these numbers to justify your 50 basis point rate cut. And now you have all these people on Wall Street coming on television. Even John Paulson was on CNBC today of the Big Short fame, advocating for 50 basis point rate cuts, saying the Fed should do 50 basis points. And a lot of people have been saying that the Fed should do 50 basis points. But the real reason that they're going to do 50 basis points was the news that we got yesterday from the U.S. Treasury Department issuing their budget deficit for the month of August. The U.S. government ran a budget deficit in August, 1 month, of $380.1 billion. That's 1 month. That used to be an entire year. In fact, I remember when $380 billion was a bad deficit for a whole year. That was a big number to run, $380 billion in 1 year. We just did it in 1 month. This is the biggest deficit we've ever run as a nation in a month of August. That includes the 2000 when we were in, or 2020 during the COVID pandemic. In fact, the only months that we had budget deficits larger than the $380.1 billion that the government just ran in August was during the early months of 2020 when all the COVID stimulus started, right? So we locked down the economy and we were sending out all these stimulus checks and all the PPP money and all that stuff, right? All that money. That's when we had a bigger deficit. Plus, of course, the government tax collection went way down because people stopped working. So they weren't getting, the payroll uh, um, taxes, right? People weren't working, people weren't spending. So government tax revenue went down, but their expenditures went through the roof. That's the only time that we had a bigger month. Forget about just August. That's the only time we ran a bigger deficit than we just did. In fact, if you look at what they were expecting 252 billion. This is 130 billion more than the markets were expecting. That is a huge number. And look at the increase from July. July was 243.7 billion. So the deficits are blowing up. But if you go back to August last year, which is the most recent comparison, last August 2023, the government had a surplus of about $80 billion. So we went from an $80 billion surplus to a $380 billion deficit in 1 year. That is a massive deterioration in the U.S. government's finances. Now, part of that is due to all the bonds that matured and had to be rolled over at higher interest rates, because we're now spending over $1 trillion a year on interest on the national debt. But a lot of it is the result of a weak economy that is not generating enough tax revenue to cover the bills. And so the deficits are exploding. This shows that the economy is much weaker than the statistics would reveal, and probably jobs too, because there's probably, fake jobs don't pay real taxes. So these government numbers, to the extent that a lot of the jobs don't exist, one way you would know that is looking at the tax revenue, right? Because if the jobs actually were there, well, people would be paying taxes on what they were earning. But the government is having this huge collapse in its fiscal position because it doesn't have the tax revenues. But wait until the recession really kicks in and the spending explodes. This is why they're cutting rates. It's because the government can't afford the rates where they are. And so they need to come down. In fact, they need to come down a lot, because even if the Fed cuts 50 basis points, they still can't afford it. Not with this debt. And again, we're adding $3 to $4 trillion a year to the national debt. All of that has to be financed. So this is massive inflation that's coming. These are huge, unsustainable deficits, which I think is a good segue to talk about the presidential debates and the campaign. I talked for 2 hours. I did a X Spaces the evening of the debate. So you can listen to that. I apologize. I think the room I was in, I didn't have a great internet connection because I didn't want to wake anybody up. I should have come into the studio. I'll do that next time. But I was just in a room in my house. I didn't realize that the reception wasn't that great there because everybody went to sleep. I was the only one that was still up. But I was there for 2 hours giving my thoughts on the debate. But the most important part of the debate wasn't what they said, but what they didn't say. Or more importantly, what they weren't asked. What ABC didn't ask, because ABC didn't ask a single question on inflation, right? Or price controls or any of that, but nothing on inflation, nothing on the deficits, nothing on the interest cost that's skyrocketing to service the deficits, nothing about entitlements. I mentioned that now, for the first time under any administration, Social Security is running a deficit. They're collecting $100 billion a year less than they pay out. So where's the question about the insolvency of Social Security and what you're going to do about it? Or Medicare? No questions about the big increase in the unemployment rate that we've seen recently. Nothing about the huge downward revisions to the prior jobs numbers. No questions on that. No questions on the explosion of moonlighting, why so many Americans are now having to hold down second and third jobs. There really were no real questions about the economy or the deteriorating fiscal position of the United States and what either of these candidates intends to do to defuse this bomb, right? Nothing. Now, I think, of course, that actually benefited Harris more than Trump, because she's the one that has to defend the current state of affairs, even though I believe, Trump is also responsible. But the voters are not going to hold him responsible. They're going to hold Harris responsible. And that's the main reason that ABC didn't ask those questions, because they know that Harris can't address them. And it's a negative because obviously from watching the debate, the moderators were in Harris's corner. It was almost like, it was a tag team, or it was 3-on-1. It really wasn't a debate. And I've seen that too, where I've gone on some of these types of debates on the mainstream networks, and I end up debating the moderator. Well, that's kind of what Trump was doing. He was on the defensive all night. The moderators kept fact checking him, and I put facts in quotes because he would say stuff and they would say, "Oh, that's not true. What about this?" And in some cases, what Trump said was true. I mean, he is not always being truthful. Again, he exaggerates stuff. He boasts a lot, but he's more factually accurate than these fact checkers, because these fact checkers are basically inaccurate in the sources that they're using. But what's more important about the inaccurate fact checking is that they only fact checked Trump. Harris said a lot of things that weren't true, right? She regurgitated the stuff about bloodbath, about good people on both sides. She even said that a lot of law enforcement officials died on January 6th. When all this stuff is lies, right? And they didn't bother to interrupt her. So the only person who interrupted Harris to say she wasn't being honest was Trump, right? The moderators didn't. So the viewer might get the impression, well, she must be telling the truth because they didn't fact check her like they did Trump, because obviously Trump's going to accuse her. But I think this whole thing was coordinated. I mean, my guess, I don't have any proof of this, but I'm sure that she had those questions in advance, and she was very prepared. She memorized all of her talking points, all of her answers. She was very polished, very rehearsed. And that's why I mentioned on that Spaces that I thought that she won the debate, in that she exceeded very low expectations that people had, and rightly so, right? Because she hadn't actually spoken in public. She hadn't, talked extemporaneously. She just reads off a teleprompter. And obviously she's not that bright, right? And so the expectations were low, especially considering how bad Biden did. And that was also something that worked in her favor. There was no way she wasn't going to do better than Biden. That would have been impossible. So that gave her a good comparison, right? So she was able to go up. Whereas Trump, there was no way Trump was going to do as well against Harris as he did against Biden, right? So that was a difficult comparison that he had. And so because she didn't make a major gaffe and didn't completely blow up, that was her victory, right? And in that sense. But I think, as more people, I think about it, Trump did make some good points in that debate. I don't think a lot of people got swayed either way. I think if you came into the debate and you were a Harris supporter, you left, supporting Harris. And if you supported Trump, you still support Trump. The undecideds, we'll see how they're going to break. I still think that they're going to break for Trump because of how bad the economy is. And I think no matter how hard Harris tries to sugarcoat it, a lot of voters are not going to swallow it, especially the voters there in Pennsylvania, which is a key state. And that's where they were really almost debating over that, with all the talk about fracking and stuff. But, there's one thing I did want to talk about, or a couple things, actually. So one is the kind of bidding war now that's going on over, tax cuts, right? Again, the middle class, that's where the votes are. So that's what everybody is talking about, tax relief. And so, Harris now, she wants to do this $25,000 tax credit to buy a house, $50,000 tax deduction to start a small business, $6,000 tax credit to have a kid, right? Where's all this money coming from, right? She's just going to print it, right? So none of this is going to help the economy. It's just going to push up prices, right? More inflation. That's her plan. But Donald Trump is also promising tax cuts. He wants to extend the tax cuts that he initially passed that are set to expire in 2025. So he wants to extend those. But now he wants to lower corporate tax rates even further, right? Plus, he's now saying, I want to eliminate taxes on tips. I want to eliminate taxes on Social Security benefits, which effectively is an increase in Social Security when it's already broke. And now his latest, I think this was yesterday, he wants no taxes on overtime. Now, I'm not sure if you have to have official overtime where you work more than 40 hours for one employer, which, is difficult because a lot of employers don't want to pay overtime because according to government regulations, you got to pay time and a half for overtime. So what ends up happening is employers, in order to avoid overtime, let's say they want somebody to do 60 hours of work. They hire one person to work 40 hours, and then they hire another part-time guy to go and work 20 hours. That way they don't have to pay anybody overtime. Now, meanwhile, the guy that had a full-time job, let's say he needs the extra money, and he would like to work overtime at the same pay. He's fine working 60 hours without getting time and a half. But the government makes that illegal. So now that guy, instead of working 60 hours for one employer, works 40 hours for one employer, and then he gets another job. And now he works 20 hours for a different employer. And now that employer is not subject to overtime. And so he can get that job. But the problem is, let's say it takes him an hour to get there. He's got to drive from one job to another job. And maybe that second job that he got, maybe the wages aren't as high as what he would have got had he could have worked 60 hours for the same employer. But the government made that illegal. See, the government wants to pretend that they're getting everybody extra money for overtime. No, they're not. They're just forcing employers to hire part-time people, and that the workers who want to work overtime need to get another job, right? The government doesn't give you anything, right? It's all a lie. It's all a fraud. What they take from your right, what they put in your right pocket, they steal from your left, right? And they don't quite give you as much. Right? Like my dad's analogy was the government aid it's like giving you a blood transfusion from your right arm to your left arm, and then they spill half the blood on the floor, right? So it's better to have the government stay out. So the government is not benefiting people, just like all these different perks that they mandate paid vacations, mandated leave. You don't get that for free. Your wages are lower. Everybody earns less money, so the employers can afford to pay the benefits that are mandated. But a lot of people would prefer to have a higher salary. They don't need the benefits, but they don't have a choice anymore because the government takes that choice away. Every time the government passes a law, you lose your freedom, right? Now you have to do what the law commands, even if it's not something that you would want to do. So the fewer laws we have, the more freedom we have. And the more freedom we have, the more prosperous we're going to be. But Trump, he wants to have some way of making overtime tax-free. So these are all tax cuts. Everybody is trying to win votes by promising tax cuts, but the country is broke. What happens if we cut taxes? Well, the government runs bigger deficits. Where is the money going to come from to fund those deficits? The Fed is going to create it. And so we're going to have more inflation. So you might pay lower taxes, but you're going to pay higher prices. There is no free lunch. Nobody wants to talk about the trade-offs. We want to cut taxes. Great. Okay, we got to cut government. But you can't say we're going to cut your taxes and give you the same amount of government as you get now, because you have to pay for government. And if you're not going to pay for government through taxes, well, you're going to pay for it through inflation. And that's the dirty secret that nobody wants to admit. Now, the other thing I wanted to talk about that was a topic, in the debates are tariffs. And, Harris is using tariffs against Trump because she's saying that, this is a tax hike, which it is. In this case, she's right. But we need higher taxes, right? We got to close the deficit somehow. So if you're not going to have tariffs, what are you going to do? But she is saying Trump is going to raise taxes, and Trump is saying, no. These aren't taxes. These are tariffs on China. Foreigners are going to pay these taxes. That is not true. A tariff is an excise tax, just like a sales tax or a value-added tax. That's all it is. It gets passed on by the business to the consumer, and the consumer pays it indirectly. Either it's added on, like a sales tax, right? You get your bill, and then the sales tax is added on top, right? And you see it, and the customer pays it. Or with a value-added tax, it gets embedded in the price, and you pay it. But either way, the consumer pays it indirectly. That's why it's an indirect tax. A tariff is an indirect tax because it's indirectly taxing the consumer. He doesn't write a check and send it to the government. The government's getting the money. But where are the companies who are paying the tariff getting the money to pay the government. They're getting it from their customers in the form of higher prices. Now, a lot of Republicans and Trump are saying, well, the Chinese are just going to absorb it, right? They're just going to take this one for the team and they're not going to pass it on. Well, that's nonsense. I mean, do you think that stores don't pass on the sales tax? I mean, do you think they just say, oh, we're just going to absorb the sales tax? Of course not. They charge the customers. You think when you buy gasoline, you think the gas station is absorbing the federal gas tax? No, you're paying it. Every time you buy a gallon of gas, you pay the full federal excise tax. Same thing when you buy cigarettes or you buy liquor. You know, the cigarette companies, the liquor companies, they don't just eat those taxes. They make you pay them. That's how it works. Now, yes, if we put huge tariffs on Chinese products, the Chinese are going to sell fewer products. Yes, but they're going to raise prices, right? They're not going to absorb. I mean, think about it this way. Let's say we put a 30% tariff on Chinese products, right? Now, are the Chinese just going to absorb that hit? I mean, 30%, that might be more than their margin. They might only have a 20% profit margin, 10% profit, I don't know. But you think they're just going to absorb 30%? Of course not. They're going to raise their prices. Now, yes, they may lose 10% of their sales because people can't afford it, but that's better than losing 30% by absorbing the tariff. Yes, the Chinese or everybody else will sell fewer goods to Americans if we impose tariffs, because demand is a function of price. So if the Chinese have to raise their prices, which they will, or anybody else, they will sell fewer products at higher price points. But that means that some Americans will just go without products, or they'll have the products, they're just going to pay more. Now, of course, maybe there's an American company that might be able to sell the product, but it's probably going to raise its prices because now it doesn't have to compete with the Chinese product. But unfortunately, a lot of the products that Trump wants to put tariffs on, we don't even make. So it's either we buy the import, so we don't buy anything, right? We just go without it. And a lot of people will go without it because it will be too expensive. But make no mistake, tariffs are taxes, and they're paid by Americans. They're paid by the people who buy the products that are subject to the tax. Now, the question is, should we have tariffs? Well, tariffs, in my opinion, are better than income taxes, but we're going to have both. It's not like Trump is saying, let's get rid of the income tax and let's replace it with tariffs. He wants to, put tariffs on top of the income tax, but we got to raise money somehow. And so, tariffs are a better way of doing it than what Harris wants to do. Harris wants to raise taxes by increasing the income tax rate or imposing a tax on unrealized capital gains. That's way worse than tariffs. But make no mistake, the public is going to have to pay those tariffs, just like they'd have to pay a payroll tax or an income tax. But the tariffs are a consumption-based tax. They're taxing you for spending. That is a much better way for the government to raise revenue. It's far more pro-growth. Right? The last thing you want to do is tax savings and investment or income, right? You want to eliminate the taxes there. You want to incentivize people to go out and work and produce and save, and you want to collect the taxes when they spend. And so from that respect, the tariffs are preferable because they're consumption-based taxes, but they're going to be paid by the middle class who is now struggling, right? So it's not good news. Right? Trump is acting like, oh, this is good news. We're going to slap you with all these tariffs. No, you're going to have to pay these tariffs. But the thing is, you're going to pay anyway. If they don't have the tariffs, you're just going to pay with inflation because there is no plan to cut government spending. In fact, during the debate, when Trump was asked about Obamacare, no, I'm not going to get rid of it. He said, well, maybe I'll replace it with something better. But he's no longer talking about getting rid of it. I mean, it's there permanently. Trump talked about increasing, I don't remember if he mentioned this at the debate, but at his rallies, he wants to increase defense spending. He wants to increase Social Security spending. Interest on the national debt is increasing on autopilot. But if he's going to increase spending, I mean, he wants to have a commission with Elon Musk to, study efficiencies. But I mean, that's spit in the ocean. I mean, even if we got rid of all the inefficiencies, it's not going to make a difference. Given the enormity of the deficits that we have, you can't just cut the fat. You got to cut the meat, right? You got to make real substantive cuts. And nobody wants to talk about that. They just want to talk about tax cuts. But you can't have tax cuts. Right? Taxes equal spending. That is the real tax. So all you want to have to do is look at what the government is spending, and that's what you're paying in taxes. So unless somebody is promising to cut spending, nobody is promising to cut taxes. All these promised tax cuts are a lie, right? It's all politics. Trump and Harris are going to increase taxes on everybody, especially the middle class, because that's who pays most of the taxes. So the middle class are going to get hit hardest by the tax hikes, whether they're tariffs or inflation or even the income tax, because that's going to end up passed down to them, because it's going to mean that they're just going to have fewer employment opportunities. They're going to have lower wages. I mean, ultimately, these taxes fall on the working men and women. I mean, Harris keeps saying, I'm a champion of the workers and the working families, and that's why I'm going to cut your taxes. She's going to raise their standard of living. It's a cost of living. In the debate, she said, I am going to lower the cost of living if you elect me. Well, she's already in office and the cost of living has gone way up. I mean, she's talking about lowering a cost of living that she herself played a major part in raising. I mean, so why would she do that? I mean, why are you going to lower the cost of living if you're president when you raised the cost of living as vice president? I mean, what are you going to do? This is what people should be asking. This is what the ABC moderators should be asking. What are you going to do different than Joe Biden, right? Because under Joe Biden, the cost of living went way up. Consumer prices went way up. So what are you going to do different from Joe Biden so that prices are going to come down, while you're president? Because there's just nothing she's going to do different. She's going to do more of the same, right? Just run bigger deficits, print more money, and send it out there for people to go spend. And at the meantime, she wants more regulations that's going to undermine the free market, undermine the ability of businesses to produce goods, provide services, or create jobs, right? So it's just a recipe for inflation. It's the same lousy recipe that Biden had, and the voters or Americans have been eating that rotten cooking. Why would they want another helping? Why would they want seconds? Obviously, they don't. But the key is to hear these, candidates talking. You would think everything is great and everybody can get tax cuts. Everything is not great. Everything is a complete disaster. We've been living in a bubble. We have massive debts that can't be paid. We have to have a complete restructuring of the economy, right? We have been delaying the day of reckoning for a long time. And, we probably can't do that much longer. But none of the candidates are preparing Americans for any austerity. Everybody is promising great things if you only vote for them. And that is going to be, again, the risk if Trump wins and people expect, well, everything's going to get better now, inflation is going to go away, everything is going to boom. It's not going to happen. It's going to bust regardless of the outcome. Right? That doesn't mean I don't want Trump to be there, because I'm afraid of how much worse it will be if Harris is there. But people are going to try to blame what happens on Trump, right? On Republicans, on whatever he supposedly stands for, because people want to paint him as some kind of free market conservative. But that's not the case. And so hopefully, I really like to see the collapse happen before he takes office. I mean, that would obviously make it harder for the Democrats to blame Trump, although they might claim that, well, they knew you were coming if it happens after the election, but before he takes office. But again, too, the sooner we get this thing started, the sooner we can, finish it, right? Again, it's like when you're in a hole, right? The first rule of holes is stop digging. So, I want to stop digging this hole. I mean, we've been digging it for a long time, right? That's why it's the Grand Canyon of holes. But every day we dig it deeper, right, makes it that much harder to get out. So if we could start doing the right thing, and again, we're going to have a crisis. And it's always better to have a crisis on your terms than on your creditor's terms, right? To kind of control it, like a controlled burn versus a forest fire. But the political incentives are just not there, right? Every politician, his incentive is to postpone the problem. Even if you make it much worse, it doesn't happen on your watch. It happens on the other guy's watch. As long as I can get to this next election, then it's somebody else's problem, right? Well, eventually, somebody's left holding the bag, right? Just like with any kind of Ponzi type investment, we've got a Ponzi economy. And, I think that the bag holders, unfortunately, are here after the next election. And so it'd be better to prepare the country for that. But I know that that's never going to happen because nobody gets elected promising austerity. But that is ultimately what we're going to need. And hopefully we get it with a big dose of free market capitalism, because that is going to be the only way that we can get out of this hole. Anyway, that's it for today's podcast. Again, don't forget, if you're not a subscriber at Schiff Sovereign, make sure to go to our website and sign up for the free newsletter. And if you want to try the premium letter, I think it's worth your money. If you don't like it, you get a full refund. Don't forget also, I mentioned it's a long weekend. Who knows? I mean, again, we haven't had a big Sunday night where gold has gone way up. Who knows? Maybe it'll be this Sunday night. But regardless, the price is going higher. I think you want to buy it. You want to buy silver on Monday. Contact Euro Pacific Asset Management. Even though we're up 31% so far this year in the gold stocks, you ain't seen nothing yet as far as I'm concerned. There is a huge, huge move coming in these stocks. We've barely scratched the surface, I think, in where these stocks are going. So as long as you're a risk-oriented investor and you're comfortable with risk, then you really want to get into these mining stocks. So talk to the representatives at Euro Pacific Asset Management, europac.com. Again, if you like the video, don't forget to make a comment. Give it the thumbs up. And again, remember, listen to my wife's song. Go on to Spotify. G.Y.B. That's the first song. There's about 10 more coming off of this album, and then she's already working on another album. So if you like it, great. Give me some feedback, and definitely share it with your friends. Bye for now.